Afternoon, everyone. It's Chris from Solstice ATR as well as Excel. You can find me on Twitter, Instagram, Discord, as well as YouTube. Remember to smash the like button. We trade side market, up market, as well as down market. We're not a broker dealer. Past performance doesn't give us any indication of future results. And we trade different commodities, different equity options, as well as Bitcoin and crypto. Let's go to the first slide that I have up here. I was not here last week. I was traveling. I was in the Bay Area, so I wasn't able to do a video, but I put an outlook for the coming week, which happened this week. Unfortunately, I tweeted it on Twitter. Extreme volatility comes with some knee final lows. And you're going to tell me, I tweeted it and I said, hey, this may be a bottom in this coming week, which we had Wednesday, and we totally reversed back. But I wanted to show that on the New York Stock Exchange, the advanced decline line on Friday was 80% to the upside. If you take the declining stocks in relationship to the up stocks, we had 2,608 going higher while 218 were down and 12 of them were basically neutral. So we were 80 to the upside in relationship to 20% to the downside. We use this adaptive algorithm for side market, like I told you, and we trade what we see on the charts. And you can see on the monthly bar, this is a monthly bar which has not closed. This was the March Fibonacci. If you take the high to the low, we take the 18 simple moving average, we got extended to the bottom. We double top. This is the November of 2022 or the December highs of 2022. This is the October lows of 2022, and we rallied up. We retraced to that level. If you take the Fibonacci from here to here, you had 150. And if you take from here to here, that was the 50% retracement. If you take the December high to the October low and you extend it to the top, you got 100, 200% up. Or you take the highs to the low, you retrace 50% of that move, and we bounced back up on the profile. Can we continue? We're going to check what the outcome is coming in the following week due to tariff, inflation, cost of goods, Federal Reserve Board, and in case the Feds are going to decrease interest rates by a quarter basis points. Let's go to the next slide. This is remember, VU is the S&P 500 in Vanguard, or you can use the spiders. I usually use the spiders through SPY instead of VU, which is Vanguard, and you got the iShare as well. So let's go to the next slide. What I put here is the tick, the $TICK. And I showed the New York Stock Exchange as well as the Nasdaq 4-to-1 ratio was increasing on the New York Stock Exchange while the Nasdaq was 2-to-1. So the ratio was 4.7%. The Wednesday rally, you can see it here. The breadth of the New York Stock Exchange was increasing while everybody was panicking on Wednesday, and we got that big push up. Thursday was an inside day to up, and Friday was a rally up where the New York Stock Exchange once again, the advance to decline was 80% to the upside. If you want to learn more, please let us know. Let's go to the next slide. What I put here is the monthly monkey bars or volume profile. The volume profile is on the left. The time spent is on the right. I took the Fibonacci from high to low on the E-mini, which is the S&P 500. You can do it on SPY, QQQ, Apple, Amazon, and so on. We took the highs and lows. We extended the extensions to the low. We did 138% to the downside in the S&P 500, and we eventually found ground. This is the monthly profile on April so far. The April has not closed. We are coming at a balance, and we rallied back up to close in this area. If there's going to be continuation, we got to take out the prior last week's range. Remember, we trade the up market, down market. We're not an investor on a long term. The retirement account are totally different than a midterm account and a trading account. A trading account, you're in it as a business to make a profit. So don't come and say to me, hey, you're not holding a position. We day trade then we end up in a weekly position, maybe 2 weeks out or 3 weeks out. If the position is right, you want to buy things at a discount. When things are bleeding, you want to buy on the way down. On the way up, you want to sell into strength. Let's go to the next slide. And this is the volume profile. This is the value high, value low, point of control, value high, value low, time spent. So let's go to the next slide. You can see the value high and the profile, the value low, and the point of control are here identical, but you can see the time spent was lower than the value high, and the time spent is lower than the value area low on the volume profile. So let's go to the next slide. And the reason why I wanted to show this volume profile in the E-mini, the Wednesday bar candle did on the E-mini micro or the SPY or the ES or SPX. The SPX did 10.28%. The E-mini from low to high and the close of it was basically a 10.24 from the open to the close. So you had a 10.2%. If you look at this is the Monday bar, value high, value low, point of control, time spent. Then we had balance in here on Tuesday. Wednesday, we reversed, we cleared the 2 days high. We closed up here. Thursday was an inside day. If you take the high and low and you measure that, that was 50% retracement, bounced back up. And on Friday, we were inside down day, then we rallied back up. Until we cleared this area, we are in balance on the profile. This is why I wanted to bring it up. You need to learn more about it. Let us know here, and we can show you how to use it correctly. This is for illustration, once again, in education. Let's go to the last slide. You can check us out at Solstice. Get in contact with me on either number. Hit the smash button, subscribe to the YouTube. It's the weekly free video. Let's go to the first, and I wanted to show something here on Twitter. I'm not a broker. I have the right to put my tweets out. This is for educational use. Use at your own risk. Good morning. The overnight inventory may have found the bottom ground. Watch out if any news coming out of the White House. Trump 2.0. You know, I joke around. I put tariff news. Countries will be bending over. I said the word bending over. I know I'm a little bit sarcastic. Over the negotiation, no exception to anyone. Happy hump day to all. And this is my total tweet. If I click on it, it's going to show you the time I posted it pre-market before the market opened up. If you open each chart, I usually have the pre-market open high and low, as well where the pre-market was, where we were before the announcement. That was at 6:15. Here's the S&P showing the retracement on the monthly. I know there's a lot of noise on it, and I showed the 138. This bar can be a double bottom. We wicked up. Then let's see the next bar. This is the Nasdaq. Last, I put happy hump day. If I go down to the next chart, is this a sign of a double bottom on S&P E-mini, which is SPY, and Q is QQQ on the charts for a relief in the stock market or more noise to come? Lock in some profit. And I said in this morning, this may be a double bottom. And I put Bugs Bunny. I like Bugs Bunny when I was a kid. I watched it, you know, Roadrunner and so on. This was the 5-minute bar in the morning on the S&P and the Nasdaq, showing the value high, value low, point of control. We came out of that downtrend channel. We double bottom in trading hours and rallied up. When I saw this, I said, get into everyone, go long. We broke the channel and we broke the open range for a 30-minute on the Nasdaq as well as the S&P. Here's the chart and the timestamp. If you want, I'll show it. If I click it, there's the timestamp on Bugs Bunny at 10:12 a.m. I put something about agriculture. Third, I said fuzzy wipe out. Love this. ES and Q, SPY. Thank you for The market gods, Amazon, Google, Tesla, NVIDIA, Netflix, and Apple. I ended up in Apple, in Tesla, and Google. I didn't get NVIDIA and I didn't get Netflix that morning. Here's the rally and here's the timestamp on it. You can see the timestamp that I had. Let's go down here. 10:24 a.m. He's the spike after Donald Trump 2.0. That's not an insider information. Market volatility. When it finds a bottom, usually you get a fast relief up, or if the market finds an extreme high, usually you get a relief back down. So this was a major move up, and here's the breakout and the timestamp after 10 o'clock. 1024, he's the spike up and the rally. We ended up at value area high on the prior day profile. So, do I trade what I see? Yes. We trade what we see, not what we think. And remember, we are traders. This is what we do. So classic and so epic by the market gods. The move was 2 standard deviation in a heartbeat. And I gave a shout out to Kabuki Trader. He is known by Kevin. I'm not going to go in details. And here's a big kiss for basically Yabba Yabba Do. And here's the move above the value area high in 2 standard deviation from the cyan to the extreme deviation of in the Fibonacci extension. Here's the value high, value low, and the point of control. We got that spike up. We had 2 distribution, 1 time framing here and the second one up here. That was on Wednesday. If you like to follow us, I'm not going to go more into detail. Once again, you can check my handle. It's at Chrissy Farah on Twitter. And I hope this was helpful to show you that the timestamps are real time. We have a Discord. If you like to join, check it out. Let's go to the first thing that I want to do on after this. We put this back here. Let's go back to the front page. I want to go to the S&P 500. This is the E-mini. This is the monthly measured move. This is the spike down. And you're going to tell me, how did I come up? If I take this low from here to this high, you can see that's a 13%. But if I take the open to the close of the bar, that's a 10.24%. This is how I came up with that 10.24% on the measured move on the monkey bars, and how this is how you trace the bar. If I take the high to low, I'm going to adjust this in the style. You go in the setting because this is a little too high. The price axis, I'm going to bring it down 10 everyone, so we can see the bars. So I dropped it down up here so I can get more space. If I'm going to measure the high to this low, you can see we had a 21.63%. As year to date, we're recovered to 12.45. We are above the 15% to be bearish sentiment. If this has found the bottom in the S&P 500, if I zoom in here, let's just zoom in this area, okay, everyone? I want to zoom into this area. You can see the 5509. We tested it. We closed above it. We went up. This is a double top almost. We tested it. We're holding, but on Friday, since the Thursday bar was down and looking back up, we tested the 50%. If I take the high and low of this bar, we tested the 50. We rallied, and on Friday we bounced back up. This rally is important to me. If we can clear this area, get to the backside of the 18 SMA, my target, not just the F5, would be F6 and the backside of this channel for the run up. If we end up losing it and coming back to this side, total different ball game. So you protect your assets, trade what you see. Let's go right now, and I'm going to show you the combo on the maroon. This has the tech mega. Oh, that's the SPX. Hold on. Should be down here. It's an orange. So this has Apple, Amazon, Google, Meta, Microsoft, Netflix, NVIDIA, including as well Tesla. I included in there Netflix. The reason why I wanted to have the top 10, 15 holdings in the Nasdaq 100, which are the top, they call them the Fantastic Seven. I added Netflix in there, and you can see that the Nasdaq 100 had 1.89%, Apple 4%, Amazon 2, Alphabet was 2.5, Google L was 2.83, Facebook was down, Microsoft was 1.8, Netflix was a little bit down, Nvidia was up, and Tesla was a little bit down. The reason why I wanted to bring this up, I wanted to show you guys Google by itself. You can see that we have cleared that bottom, and I'm looking for the backside of that 18 SMA to get above F3. F5 is 50%, F6 is 61 to get back to the 61.8 and the 50 SMA. If things are going to work out in the market and clear the 200 SMA. So what I'm going to do, disconnect it, and I'm going to put Google L in here. Google L is setting up in there, and you can see that Google down here has that 156. If I can clear the 18 SMA, not just the backside of this channel, I'm looking for the $170 range in the 50 SMA, which will come in a little bit lower, maybe around the 168 range in target in Google. So let's go to one more, and I want to show a setup on it. I can show the head and shoulder forming on Microsoft. Similar situation. You can see that there is a breakout in it. If I go to crude oil USO, I'm going to show the USO ETF in crude. I'm watching that area in case there is a breakout in crude. Another one is GLD, which is gold, GC or GLD. I'm going to use the ETF GLD on the charts in crude, in gold. If you can see gold coming, you have this professional gap, there's fear. There's 1, 2, 3 islands in this move up. It looked above. The RSI divergence is a little bit overextended. So if I right click in here on the studies, I'm going to go down here. You're going to ask me, how do you do this? Don't ask. This is our own adaptive algorithm that's built. If you need to learn more about it, ask us. We're here to help. You can see that the RSI is getting extended, but if I can fill partial gap here and come back, retest the 288 in gold, this is an opportunity in gold or in silver. Let's go one. I want to show not Apple, I want to show Amazon. Amazon, you can see after the tariff, this was a lot of consolidation here, building a lot of volume. If I can clear the backside of this channel and things are going to settle, and that's the range I have that level up, I'm looking for the 50 Fibonacci and the 50 SMA to catch up to the 206 in Amazon. Last but not least, I will show you how to do the measured move on the profile on the Nasdaq 100 or the micro and Q. You can do it on QQQ. Same thing. This is the monthly measured move, but what I want to do, go from daily. I'm going to use the intraday chart. I'm going to go to a 10 days, and I'm going to do something a little bit on the 4-hour or 6-hour. I'm going to use the 6-hour. The gray area is the overnight, and the trading hours are the dark areas from 9:30 till 5 p.m. East Coast, but usually most equities trade till 4:15. It depends which ones are open, not open in ETFs, but usually by 4:15 you should be done with the market on the East Coast and 1 p.m. California Standard Time. So if I want to do the measured move, I'm going to go get this distance. This is my high and my low for the week. This is my Sunday low. Okay, everyone, this is my measured move. What I would do is get a different color, edit the property. I'm going to make all this go to blue so everyone can recognize the levels. You can see the highs and lows and the extensions on the micro Nasdaq 100. So the extensions to the downside, in case I do fall, I cannot break up. I'm going to fall all the way to the backside of the 100% and minus 80, and vice versa. If I break out of this Wednesday high in this area, I'm looking for the 180% to the upside on the Nasdaq 100. I am not biased, but I can show you how to do this on the or you can do it on the charts by itself. So you can see the Fibonacci is the resistance, support, and the machine grabbed it. So I can grab this high to this low, and we have at least a level to look at for the upside or downside in case the market changes. The market profile can tend to change. And you ask me, how do you do this? You see in the style, you go to the standard. There's what we call monkey bars on Thinkorswim, which is now owned by Schwab, not TD, because there was a merger and acquisition. You can see this is a 3-day range. But if I want to see the total range for the week, I'm going to go in the time frame. I'm going to go intraday. Instead of showing 3 days, I can go to 10 or 15 days, go okay. This is the market balance of this week. This is the big bar on the Nasdaq 100. If I can clear this downtrend channel and I break up, I'm looking not just to get above this balance, because this is a point of control that's never been touched. That's a virgin control point. This is a virgin control point down here. We have the POC developing here. This was retested, no longer valid. So I have a VPOC down here and a VPOC down here. That's a point of control where most volume is. In case I do break up, I'm looking for the extensions to the upside in the profile. So this is how you look at the profile. You can go from style, go back to standard, you'll see the candles, and we can go to the daily chart time frame. Instead, we can go daily 1 year, or custom, we can go to 2024, and we can put OK, and you can see the levels for the week. Since if we can find support and we can clear this midpoint up here, this backside of these channels, the Nasdaq is a little bit, coming back to this upside is a little bit more weaker than the SPY, or you can use the VU. If I do VU, SPY, you can see that VU on the backside of this midpoint. If I take the highs and lows, my backside is here. But if I can get a push up, because this is the S&P 500, or you can use SPYG for growth, and you can see that the SPY is a little bit more stronger than the Nasdaq. If I can clear this area, I'm looking for F6 and the backside of this channel up here on these companies. So I hope this video was very helpful. If you have questions, once again, check us out. Get in contact with us. We're here to help. Take care. Over and out. Enjoy your weekend.